Hey guys, welcome to Real Estate Informed, the channel that keeps you up to date on all things real estate. My name is Kevin, and today I want to talk about a video that I did a couple months ago about the peak of the real estate market was third week of July. I'm sticking to that story. The reason that I bring up this is we're in the Seattle market, and July prices fell. July, August prices fell. September was it was probably by 1%. Prices fell, and we were getting less offers on homes. The market was slowing down. I knew that this was kind of like a breaking point for us. And so basically how hot the Seattle market is basically like a, what will happen in other states type of situation. So, it's just amplified in bigger cities like New York, Los Angeles, Seattle, San Francisco. So I noticed it, I made a video about it, and that's what started to happen recently. And the reason I'm making this video is in October, the first week of October to, I would say, the second or third week of October, Seattle was lit on fire again. I'm talking 200K over asking, 10, 15 to 20 offers per house. Even $2, $3, $4, $5 million homes were selling in the first weekend, which is very rare because it takes a specialty type of buyer to buy homes like that, and they were just flying off the shelves. And they were selling like hotcakes, and obviously same thing with I had a listing that was I think in the $430,000 range, and we got 7 offers on it. So and that was in early October. Yeah. So I am sticking to my story of that the peak of the market was July, the third week of July. What is happening now is I've been doing some research. I'm trying to figure out what happened, that we're just literally, it feels like January, February, March again, where cities like Bellevue and Redmond and Woodinville in Seattle were just getting, it didn't matter if the house was $600K or if the house was $3 million. They were getting $200K over asking. It was ridiculous. And that's what it kind of felt like the first 2 weeks of October. So I went back and I looked, and I'll put the little graphic up here somewhere. But basically what happened was, I think September 24th, there was an increase, there was a little spike in interest rates. I think it went from 2.7 something percent to about 3%. Then in October 4th or 5th, I believe, there was another spike that it rose to 3.04%, 3.8. Now this isn't a lot. It just went from 2.7 to 3%. But it went up. Then it kind of leveled out and then went up again in September 24th, went up, then it leveled out, and then October 4th it went up again. Now it's basically steady. It's kind of doing a little zigzag thing, but those two little spike points, that's why the market blew up in October. I believe there was a lot of people, especially on the higher end, because it really makes a big difference. Obviously, if you're buying a $400,000 to $500,000 house, it does make a difference. But when you're buying a $2, $3, $4, $5 million house, and you're paying 2.7% interest versus 3.1, 3.2% interest, it's a big difference in your payments. So I think those people, what essentially happened was people started seeing the interest rates going up, so they ran out of fear, thinking that, hey, the interest rate is going up. It's at 2.7, it went to 3, then it went to 3.08 after that in October, the first week of October. So people just were running towards houses and just buying them up in the fear that the interest rate was going to go to 4, 5, 6, and 7%. My opinion on that is, yes, that's exactly what happened, and that's why there's we were getting multiple offer situations again. But another thing I want to point out is I think that, as you can say, with inflation, it was transitory. I guess the terms that they throw around nowadays. I think that that's just now that the interest rate levels out again, we're going to calm right back down, and people won't be so scared because they'll see that, okay, it went from 2.7 to 3, and now it's just staying at 3. It's not going any further up. I think sometimes the Federal Reserve does that to stimulate the economy, like hike the interest rate. But I'm telling you right now, and I'm sticking to my story, peak of the market was July, third week of July, and the interest rates will not go up. They cannot taper, because if they taper, they will crash the economy. So and if something else is going to crash the economy, that's fine. But if you think it's interest rates, they can't increase interest rates to 4 to 5%. It's just not going to happen. I bet you anything, their interest rates probably in early January is probably going to drop right back down to 2.7. Might not go back to 2.7, but it'll go back down to 2.9, 2.8. It'll stay below 3. It will not go to 4% or 5%. I guarantee you that. Because if it did, you'll crash the economy. So that's my video for today. I just wanted to give you guys an update. I'm sticking to July, third week of July. I'm sticking with that story. All right, guys. I'll see you on the next video.